Kevin, let me start with you. You know, there has been some remarks about the fact that there has been nowhere to hide, at least recently, in terms of asset classes performing well. Do you anticipate that's going to continue, or is there one area that you're particularly focused on as providing perhaps outperformance?
Yeah, we think the leadership is going to come from more quality kind of names. Consistency is probably the place to go this late in the cycle, as opposed to growth or looking for other areas where you might look to torque up growth through leverage or something else. So places like healthcare, consumers, names, those kind of things to us make a lot of sense at this point. We were looking for modest returns this year, given what we were seeing in our data, and we're pretty much on track to achieve that this year.
César, a lot of people are focused, as they should be, on what is going to happen or not happen in Argentina. The president saying not long ago, in terms of a deal with China, we're close, but I don't know if I want to do it. Frankly, I like the deal we have now. How does that figure into sort of your view overall of the markets and of the world economy?
Right. So our main view is that we will have preliminary understanding on trade. What this means is that it's basically a framework for having further trade talks down the way. It should not be any material measures, but just an agreement to have perhaps quarterly reviews for some agreements and some reviews of some implementation of these changes. Overall, what we think is that it should be positive for markets if we get a positive signal out of this G20 summit.
Kevin, what would a positive signal look like? I mean, is there any reason to really believe that 10% tariffs on Chinese imports is not going to increase to 25% on January 1st?
Well, I think obviously, a positive signal would be anything that comes out of, let's say, the G20 meeting that would indicate that things are thawing a little bit. Remember, when we went through this with Mexico and Canada, there was a lot of noise around it, but ultimately came through with a deal that was kind of palatable. So the market has been circumspect about a deal coming through. And if you got something that broke in a positive direction, that could really do that could significantly increase the outlook for growth and investor enthusiasm. So we would look for markets to begin to respond with tighter credit spreads and a better performance by equities if the market began to sniff out that something positive was coming out of, let's say, the G20.